This Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing Podcast. My name is Peter Higgins and welcome to Twin Peaks Investing Podcast 163. And we're recording this on the 30th of September 2025. You can find me at Conkers on X, and you can find me on LinkedIn and on Blue Sky app. And I'm here with my fantastic, very patient fantastic co-host, Henry Viola Hare. How are you doing, sir?
I am very well, thank you, Peter. Had a good day, still alive and kicking. So, yeah, in good spirits, I would say.
Good, mate. We've got to give a bit of news at the minute, Henry, regarding what's going on in the markets. There's lots of chop, lots of change. Just going to read the latest headline coming out of America, because we've got it so bad in the UK. The Americans are trying to outdo us sometimes, and this is one of them, right? The UK government enters partial shutdown as 100,000 federal workers resign via buyout program. Yeah, the US government initiated a partial shutdown at midnight. Will initiate at midnight on today's date, their time. Yeah. After Congress failed to approve a funding resolution amid disputes over extending Affordable Care Act subsidies, concurrently nearly 100,000 federal employees resigned through a voluntary buyout initiative launched by the Trump administration in January 2025, aimed at reducing bureaucracy at an upfront cost of $14.8 billion, with projected annual savings of $28 billion. We don't know if that's accurate or not, but that's what's going on now, partial tonight. What mayhem that's going to cause in the markets tomorrow, I do not know. But if you think the equivalent up and down the country of, given the size of America, you can do the percentage cut on whatever numbers that, skew it that way, ratio it. That's a significant number of public sector workers going, we're out of here. We're going to take the redundancy. And who does the work then? Does it become more efficient because you've lost 100,000 people? Yikes. So that's what's happening in America as we speak, Henry. But you've heard about that before, and it's a recurring sort of thing, lockdowns, but this time it's because of an act that Trump has passed regarding.
Well, if you remember back when Obama was in power, he had a shutdown back in 2009, I want to say, something like that.
Yeah.
Exactly the same thing. So the US government's got a debt ceiling, and they are not allowed to borrow more than this debt ceiling allows. So every couple of years they bump up against it because they can't stop borrowing. They bump up against it, and Congress therefore has to say, all right, well, we know you've hit the limit, we'll allow you to spend even more. And every now and again, Congress goes, no, we don't really want to do that. And so the government literally runs out of money.
Yeah.
And so all the staff go home. It's a bizarre way of running the world's largest economy.
Yeah. And bizarrely, absolutely bizarrely, what happens today with the FTSE 100, Henry?
I'm guessing it's up.
It's hit a new all-time record high of 9,350.
In fairness to investors, I can see how we look like the safe pair of hands relative to the bedlam going on over the Atlantic. So
explain that for our newer listeners. Why do you think that is, Henry? Why do you think here is a safer pair of hands?
We do have a functional economy. Admittedly, we are struggling with our own budget problems, with Rachel Reeves struggling to bring in enough tax to cover expenditure. But we seem to be able to pay our bills for now. We are able to borrow. We do have a strong legal system. We have some of the largest global businesses in the world operating out of the UK. There's quite a lot to like relative to a country that has just decided we're going to stop paying the government as of midnight on the 30th of September.
Yeah, I'll take a bit of that with what you said with a pinch of salt, mate, because there's so much chaos here as well, isn't there?
Oh, there is, don't get me wrong, but there seems to be chaos everywhere. I will temper this with a slight silver lining, which I spotted on Reuters today. Did you know that the Spanish bond yield is now one of the lowest in Europe. Spain has falling debt to GDP, and the bond markets are charging the Spanish government less to borrow money than the French government. They have a budget deficit of less than 3% to France's 6.2, 6.3% annually. They're in deficit by. So 10, 15 years ago, the Spanish government was on its knees. They were cutting everything to ribbons. Youth unemployment was through the roof, but they have taken their medicine and they have turned around.
Yes, they have. You're right. And you've got to remember, I'm not sure how many podcasts ago, we were regaling how Greece was the go-to place for bombs and stuff like that after they were in such a mess ages ago. And then either before or after that, it was Spain that was in a mess.
Yep.
And now both of them are sorted out, and we're thinking, gosh, what have we got to do to turn this situation around here? You know, it's an absolute nightmare, mate. Right, a bit more on the Americas, mate. And this could, the reason why I'm sharing this particular story is because for those that are out there that have got exposure to stocks that are exposed to auto parts, yeah, and motor parts and anything vehicle related, there has been a company that's filed a Chapter 11 bankruptcy over £10 billion of debt. So the debt has done them in. They've filed for Chapter 11, and that company is called First Brands Group, a Cleveland-based auto part supplier known for Fram filters and Raybestos brakes. So 29th September, listing assets between 1 billion to 10 billion against liabilities exceeding 10 billion. The company had expanded through private equity-backed acquisitions, and now it's filing for Chapter 11. So any companies that's exposed to that company, have a big, deep look into your portfolio. See if your company's got any exposure to First Brands Group. Henry, anything?
The really scary thing about that, so you've just listed $10 billion in debt. Shareholders and the board were only aware of about a fifth of that on official filings. So
Yikes.
I was reading an article today that alleges that they had used what's called supply chain financing, where you borrow against invoices to be paid. That they had borrowed so much money that all of a sudden, when that financing source started to dry up and they started to have cash flow issues, they just fell over. But the board supposedly were unaware of the vast majority of this. So I suspect this is not the last we're going to hear of this, and I suspect there will be a fraud investigation pending.
Wow. Somebody's been naughty there, mate. Somebody's been naughty.
It's pretty shocking. Pretty shocking.
Pretty shocking indeed. Okay. Right. Can I share some brighter news with you, Henry?
Yes, please do.
Yeah, some positive news. Okay. I want to share some positive news with regards to our fantastic listeners globally, nationally, who have come out in recent past 2 weeks and absolutely been so generous, so kind, and it's been so overwhelming to see some of the messages that we've received. I'm going to go backwards on this with the one that's closest to the podcast from 2 weeks ago, and read out some of the messages, and I'm going to tell you guys what the total is at the moment. Good friend of ours, David Sumners, very deserving charity, championed by two very decent gentlemen. Keep up the good work, guys. Dave donated £250, so brilliant. Thank you ever so much for donating that. Exactly, Henry, to the Menphys Just Giving page. N20, who's donated before, so thank you ever so much, N20. Had to donate some more once I looked into what you do. Keep up the good work. Literally, you are making our children's lives so much better. In brackets, thank you also for the offer to visit, and I will do that. N20, just get in touch with me as and when you want me to visit. £70 plus £17 gift aid. So fantastic there, N20. Thank you very much. Chili 18. Hit a portfolio target, not huge, but wanted to share my good fortune. Wow, fantastic.
That's the way
Keep
to
up the
go.
good work. £100 plus 25 gift aid. Chile 18, brilliant, mate. Thank you ever so much for doing that. It's lovely to see people's portfolio hitting targets that they want to achieve. And thank you for making that generous donation, sir or lady. David WX, thank you for everything you do. And every guest for giving up their free time and not going behind a paywall. No, mate, we're not going behind a paywall. My first donation, much to my shame as a long-term listener. No problem, David. Thank you for making your donation, which you kept anonymous. Appreciate that, sir. Thank you ever so much. And then we've got PID, P-I-D-D. Enjoy the podcast, exclamation mark. Thanks. £10 and £2.50 gift aid. Thank you, PIDD. And then we've got this individual who keeps dropping big changes in to us. Eclectic Trends is back again 4 days ago. Glad to be able to do this, and it's an excellent cause. £250 plus £62 gift aid. So Eclectic Trends, thank you ever so much, sir, madam, for your continued support. Fantastic and generous support there. Really, really appreciate it. Our good friend Matthew Gregory is back again with another donation as well. And as always, he's got to say something funny, hasn't he? Thank you ever so much, Matthew, with 1T. Seeing as the spooky season is upon us, here is a treat for Menphys. Great show, chaps. Keep up the work. Sending out that positivity. Another £50 from Matt there, and gift aid of £12.50. And then my good friend from Leicestershire here, a fantastic ambassador who supports numerous charities across the UK, in fact, not just Leicestershire. Jim Gannon, if you're listening, wrote, pleased to contribute to this superb charity via the fundraising efforts of Peter. I wish him and Menphys good fortune in the months ahead. £50 and £12 gift aid. Jim, thank you ever so much. And that's where we are, Henry. Some fantastic donations there. If you haven't managed to do a donation yet, if you've got £2 or £5, please, please, please donate to support the young people that we're trying to get into gainful employment now and get them trained up so they can get into the workplace. That's what we're working on trying to do now, to try and get to £5,000 to do that program for into 2026. So the total we're at the moment, Henry, we're over 60% plus now. We're at 3,791. We've got 2 months, October, November, December, to hit £1,000 and a bit, to hit that £5,000 target. So any help that you guys, ladies and gents, wherever you are in the world, can donate, we're getting nearer. We're getting nearer. So please, please, please drop in at the £1, £2, £5, whatever you can afford, to the Just Giving page, which is www.justgiving.com/page/Peter Higgins. That is the Menphys Just Giving page. What do you think of that total, Henry? It's bounced so much in the past fortnight or so, month or so.
That is spectacular, Peter. And honestly, thank you just so much to everybody that has donated. There are some incredibly hefty donations in there. It's massively appreciated. It really genuinely is. Peter and I care a lot about the Menphys charity. We love producing the podcast, and it is really, really well received to see people putting their hands in their pockets and supporting the cause. Genuinely very, very moved by that. So thank you to everybody that's donated.
Absolutely agree. Yeah, you've all been absolutely fantastic. Really, really appreciate it. And every single child that your donations will be helping, every single child. We're making a fantastic and immense difference. Right. So, Henry, you asked me to choose a topic for this week.
It is your turn, Peter.
I threw it out there, and you went, yeah, all right. I can see the reasoning why behind that. And we're going to talk about mining stocks, folks, and options, opportunities within the mining sector. And the reason why I'm talking about this, because every other day there seems to be another record being broken in one of the commodities. Everyone's talking about gold. So what's the bit I pulled up today, Henry? The headline was gold surges to record $3,870 dollars per $3,870 per ounce. That was today's headline. Yeah. So marking the 39th peak of the year. So new one, new one, new one, new one. 39th of the year. That's how much it's, and people have gone, oh, I think it's gone too far now. I think it's gone too far now. Blah, blah, blah. Up 43% year to date.
Yep.
At that figure. It might have changed in between us coming on online. What's behind it? Driven by central bank purchases exceeding 1,200 tons. Persistent inflation above 3%, a weakening US dollar, and geopolitical tensions almost everywhere. Yeah. Silver also climbed to 47 per ounce, $47 per ounce, its highest level in 14 years. And amid strong demand from Asian markets and ETF inflows, Envy. You know, we don't often hear about inflows in the UK regarding trusts and funds and so on and so forth and asset management. ETF inflows for silver surpassing 85 billion. And analysts projecting that gold could soon hit 4,000, which is it's not that far away. $1,130 an ounce. I think they could do that next week. We'll definitely do it in October if it carries on. Yeah, regarding the tensions between and all the geopolitical stuff that's going on. Well, so that's where we are, mate.
You can see why. I mean, I've always been quite bullish on commodities for the simple reason that commodities are denominated in what is called fiat currency, pounds, dollars, euros, whatever, right? These currencies are created out of thin air by the government. Every year, the government says, well, we will print some more pounds, we will print some more dollars, we will print some more euros, we will print some more yen. They've been doing it for decades. They will always do it for the simple reason that if they print more, they can spend more, and the economy grows. Now, if the productive capacity of the economy grows at the same rate as the rate of the money supply, then you don't really get any inflation because the economy just gets bigger. But what happens is that governments get greedy and they end up printing money faster than the productive capacity of the economy, which then weakens the purchasing power of those individual pounds and dollars and euros and whatever. And so the more this phenomenon goes on over time, the more pressure, the more upwards pressure there is on everything, on gold, on silver, on copper, lead, on corn, on orange juice, wool, every commodity you can think of will cost more of those little metal coins in your pocket, which now we seem to be desperate to get away with so we can, create digital assets even faster. Now, if you rewind, 100 odd years, we were pegged to something called the gold standard. So every currency in existence, you could exchange it for physical gold. You could take your pound coin or pound notes as they were back then. You could go down to the Bank of England and you could say, I want the gold coin. And they would give you one. They'd give you a little bit of gold. And about 75 years ago, a guy called Richard Nixon came along and decided he was going to break that, no longer make the dollar exchangeable with gold. And the whole thing fell apart. Currencies became free floating. You had an exchange rate mechanism. And ever since then, the purchasing power of nearly every single currency in the world has got weaker and weaker and weaker. And I sound a bit like the lunatic at the party when I go on like this and people go, oh yeah, oh God, it's another doomster stacking tins of beans in the cupboard. The currency is going to collapse. He's off again. And yet here we are with gold going up 43% in 9 months.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
Mate, and it doesn't look like stopping. That's the problem. It doesn't look like stopping. You've got, what did we say earlier? Yeah, so we've got gold up by that much. We've got silver up a ridiculous amount as well. I've got some stats here somewhere. But
silver will.
They're all just flying.
The interesting phenomenon.
Yeah. So
Sorry, go on.
silver's up 59%. Gold's up, we said 47 just then. Platinum's up 74%. Palladium's up 39%. I didn't even get the stats on copper. But that's where we are, Henry. And what happened last week as well was the Freeport-McMoran open, that has the second largest gold/copper open pit mine. Yeah. And that has been accident prone. And now it's been shuttered, and is not going to reopen again until potentially 2027. Yeah. So that's a squeeze on
Supply.
gold supply and copper supply. And it was saying here, the Grasberg mine alone accounts for 4% of the global copper supply. So copper and gold impacted on that. I need to backtrack a little bit and explain some of these different categories here, Henry. So what we've got, mining categories, we've got precious metals, which is the gold, the silver, the platinum, palladium. We've got the base metals, which is copper, aluminium, lead, nickel. Minor metals, lithium, magnesium, tungsten, cadmium. Then the energy materials, which is coal and uranium. And then construction materials, we don't really get into these a lot, but some of the big mining stocks that we've got on the FTSE are involved in this. Iron ore being the main one. And then you've got sandstone, granite, slate. Then you've got your fertilizer stuff, potash, boron, phosphate. But we're talking about the metals mainly here regarding the stuff. So yeah, so that's where we are. A couple of things happening, Henry. We're talking about all these record highs as well. Two significant CEOs, the CEO of the multi-billion pound mining company, Barrick Gold, has departed, as in left. He's still alive, has left the building. And the CEO of Newmont, who we spoke about recently, is also stepping down. So that's making me think: are they seeing these record highs in the commodity spaces that they're in, and thinking now's a good time to go out while the halo's still above my head and everything's cushy here? I've done as much as I can, because, like with all commodities, they're very cyclical. You know, tensions can continue for a while and it could carry on going higher. Of course they could, but if you've had a run of 40 odd percent in gold and copper, and it could get a tad better, but the risk to reward ratio is definitely for a pause and a price to come down.
Talking about cyclicality, this is something to watch out for. So I often use the analogy of a gold mine with no gold in it. Don't go and invest in it, right? Today we're going to be talking about mining companies, and we're not going to be talking about gold mines with no gold. We're going to be talking about, in theory, productive assets here that have found something. Absolutely. They're extracting it from the ground, they're cash flowing. But people don't realize just how cyclical these industries are. So the precious metals group tends to be counter-cyclical to the economy. So when the economy is doing badly and people are feeling risk averse, they tend to go towards precious metals. They want to buy gold and silver because they see them as safe haven assets. And when the economy is doing well, they don't necessarily always sell them, but demand tends to fall, and so the price tends to fall with them. The economic metals that you were talking about, and economic materials, so coal and steel, are very, very closely linked to the health of the economy. So when the economy is booming and we're building lots of things, demand for structural steel is high, and therefore coking coal demand is high, and steel and iron ore pellets demand is high. When the economy slows down, that demand falls, and so the price of these commodities fall. So they do tend to be quite cyclical. They're not stable demand materials at all. And so it's important when you're looking at these mining businesses to look at how they will perform over the life cycle of the metals cycle, really. You know, if the price of gold, the gold company, the gold miner you're looking at might be wildly profitable when gold's at $3,000 an ounce. If it fell to 2,500, would it still be profitable? And that's the sort of question you need to ask yourself, because just because the price has gone up lots this year doesn't mean it won't fall in the future. And if the gold price falls, that also doesn't necessarily mean that the cost of extracting the gold will fall. Those costs tend to be fixed. And so you can end up buying a productive mine today that later becomes, unprofitable.
Absolutely. We spoke in, well, I won't go over it again. We spoke in a previous pod about the all in sustaining costs, and that's what you've got to keep a
Yes.
track on regarding the mine, whether it's a gold one, a silver one, a copper one, etc. What's the cost versus what they're actually selling it for? All
Yeah.
in costs here. You want a margin of safety as to their where they can make some money. And once the price of the all in costs, either go down or go up, you've got to be careful regarding
Yeah.
the amount of monies that they're making profit margin wise. So
Yeah.
why Henry's always banging on about return on capital invested, what's the margins, etc., 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 and what debt can they service the debt? Like First Brands, they can't service your debt. Doesn't matter how big you are. You know, multi-billion-pound companies suddenly gone Chapter 11, and nobody wants to talk about it because it's in America. The domino effect
It's
could be
big.
rippling because that debt's
Yeah.
going to be someone's owed that money somewhere, mate.
Yeah. Yeah.
Right. So, Henry, I wanted to start with a company slash investment trust because I'm going to be, folks, at the AIC showcase on the 10th of October. Recommend you're going to be there. Nick Train's going to be there. I know a lot of you like Nick Train from Finsbury Trust fame and Linson Train. I think you should pop across and see us in London there. I'm going to be doing a panel session with a few fund managers, 3 p.m. on the 10th. There's loads more there. And you've got Baroness Helena Morrissey as well doing a keynote speech, as well as Nick Train and several other fund managers. I won't go into the whole list, but go onto the AIC website, have a look there, get yourself a free ticket. I think the ticket, what's the name? I think it's Social 25. You put a code in and you get a free ticket to attend the show. And anyway, I'll be there, you know, and his boss, Priority, will be there as well. So you can get to come and see us both. Right, Henry. So I'm going to talk about BlackRock World Mining Trust. Yeah, an established,
Favorite in the sector.
long established UK listed investment trust. Focus on long-term capital growth and income by investing, as it says in the name, globally in mining and metal companies, whilst also incorporating royalties, physical metals, and unquoted assets. Now, this is sitting right at the very top of its range. 52-week range is £3.77 and £6.80. And today, guess what? It hit £6.80. For an investment trust, it's up 41% year to date. Yeah. Currently sitting at a discount of 3.8%. Did I put down the yield? I think it's a tiny little yield of maybe 1.5 or something daft like that. I've missed it
Actually,
out
it's
somewhere.
higher than that. It's 3.4 according to ShareScope.
3.4. Thank you for that correction, Henry. So that's what it's. So that's why I'm talking about that one, because it's done significantly well. It's navigated everything. It's benefited from all the global trends, which is digital transformation, AI, energy infrastructure, and the rising demand for precious metals. And as I said, lots of these banks, global banks, are just buying gold and buying metals to hide away from it all, hide away from the chaos that's going on. They don't want exposure to it, and if they don't want exposure to it, then why should we? Is the question. So, what's within the portfolio, Henry? You have got the largest holdings within that. You have got Vale. You've got Agnico Eagle Mines. Got BHP. You've got Rio Tinto, Wheaton Precious Metals, Freeport-McMoran, which would have taken a little bit of a hit on recently on that one because that share price has fallen significantly. Kinross Gold, Anglo American, Glencore, Newmont Corp, Barrick Mining, Nucor, MCC Mining, Anglo Gold Ashanti, and so on and so forth. There's one called is it SQM? Sociedad Minera Sierra Verde. I think it's SQM if I remember that right. I could be wrong. But those are the larger entities that it's got in the portfolio, Henry. And like I said, the ones that we are familiar with are the likes of Rio Tinto, BHP, Glencore, so on and so forth. But the reason why I pull this one out, Henry, and people do love the dividends, and you were right saying it's 3.4, 3.5%, is that it delivers and sends to you as a shareholder its dividends on a quarterly basis, Henry. Yeah. So every 3 months, the little divvies drop in, and you're sitting there going ching ching ching. Yeah. So there you go.
I
That's my
like it.
first
I
one
really
to have a
like
look
it.
at.
I mean, this is a very highly rated fund, I should point out. Morningstar have got it on a 4-star rating. It tallies with my investment style, which is a sort of a value kind of trend. I like the fact it pays a dividend. I like the fact that that dividend looks fairly sustainable, and it's a good diversified way to gain exposure to the mining sector. All cash flowing cash flowing investments, I should point out. There's nothing in that list that is, oh yes, we've dug a hole in Mozambique and we're hoping to find something at the bottom of it next year. So, a lot to
Yeah,
like.
you can't resist but adding in your favorite quote every time we talk about miners, can you, mate?
Well, I'm nothing if not consistent.
But yeah, I mean,
But
the other thing I would say as well, Henry, and for anyone that's listening, if you want to fast track your research into the space of mining or any space, in fact, whether it be farmer space or what's the other stuff you can go in for, financials, which Henry and I are not that keen on, to be fair, but financials, insurance companies, so on and so forth. Find a fund, find an investment trust that's doing quite well or is in that space, and have a look at what their core holdings are. Then start researching them and see which ones you like. That can
yeah,
fast track your research. You're thinking, well, who do I find in the financial space? Who do I find in the gold mining space? Here's a brilliant example. BlackRock, and one of the larger entities in the world, really, has got its own investment trust in the mining space. What have they got in the top 10, top 20 of their portfolio? And if you'd done this research a year and a half ago, you might have been able to pick up a couple of those stocks at 20%, 30%, 40% lower than what it is now. So that's another way. If you don't want to buy the pooled sort of investment, which is the investment trust, have a look inside, see what they've got. Little
yeah.
scoop there you can try. So BRWM is the ticker for that investment trust, and it's done exceptionally well. Could it carry on even higher going forward? It's right at the top of its game at the minute. What are your thoughts,
Nice,
Henry?
nice. I like it. I like it. I think that's a good solid way to gain some mining exposure. So I like.
Okie dokie, mate.
Um,
Right, over to you. Have you got one?
well, yeah, for mine, I was going to say broadly speaking, there are three different types other than ETFs of sort of
Hmm.
mining asset that you can gain exposure to. You've got producers, which are my favorite, I think, and these are firms that have got a body of ore, or granite or whatever rock, and they are extracting it and selling it. Right, so you're not scrabbling around guessing are they going to make money this year? They've got an asset to sell. Then you've got developers slash exploratory type companies
Yeah.
who I am less keen on. And these tend to be, oh, we think we've got some positive, geographic results in Canada, out in the tundra. We think we're going to find something, give us some money, and we'll turn it into a producing asset. Now, the returns on these can be a lot bigger, but they're also a lot more speculative, not my area of expertise. And the final one is royalty businesses. Now, I own a royalties company. A royalty business doesn't actually operate mines themselves. What a royalty business does is own the land. And they charge mining companies to come onto their land and operate a mine for them. And they then charge a percentage of either the revenue that mine generates, or they charge a percentage of the ore that is extracted. So if you mine, say, 100,000 tons of gold in a year, and they charge 3%, then you'd pay 3,000 tons of gold over to the mining royalty company, who would then sell that. Now, go on, Peter.
Can I add a bit there as well? Is that sometimes they help the smaller miners that need financing. They loan them certain amounts of money for a stake of the produced
They do.
commodity, and they then get a royalty from that as to every
Yeah,
single ounce they produce. So that's another
yeah.
way that they become a royalty company as well.
So my preference has been for the producers and the royalty businesses. Royalty businesses incur no costs if nothing. They're not operating a mine themselves. They're a very, very capital light way of playing on the mining sector. And the producers obviously are cash flow positive. Now, to look for cash flow positive businesses on ShareScope, I wouldn't recommend going onto ShareScope and just putting in mining as a sector. You'll get 300 odd results up, and they are everything
from around the world. Yeah.
Exactly. I've got a hole in Mozambique with nothing in it, all the way up to I'm Rio Tinto and I've got 500 mines all over the world. How on earth do you start to differentiate between these? There's a few things I look for. Return on capital employed is always going to be on the list. I want at least 10%. I want a positive free cash flow. This business has to be returning cash after operating costs. So I want a free cash flow of more than zero, and a free cash flow of more than zero over the last 5 years. Really, I want this business to have been producing cash for some time. I'm also very, very wary of share count dilution, equity dilution in the mining space. So Peter comes to me and he says, I've got a mine, it's got gold in it. I'm digging the gold out and I'm selling it, and you can buy some shares. Great. And the next year he comes back and he goes, right, well, I want to expand the mine now and I need some more cash to do it. So I'll issue some more shares. Now, the problem with that is that my stake in Peter's mine goes down. I don't want him doing that. And I've noticed in the mining sector, an awful lot of companies do this. So I always filter for low share count growth. I want share count growth of less than 3% a year. If they're issuing 15, 20% of their share capital in new shares every year, you're getting diluted year after year after year. Don't want. And finally, we talked about surviving the cycle. What do you do when the gold price falls? So I'm very, very, very wary of mining companies with net debt. If you've gone and borrowed a load of money to build your mine, you might do okay this year, but if the lenders suddenly pull the funding, or the gold price collapses, or the copper price collapses, or energy prices spike, we've got problems. So I really want to see mining operators with net cash, ideally. So I throw these in on ShareScope, and I got an interesting name that popped up actually. Serabi Gold, SRB is the ticker. It is a gold producer involved in the evaluation and development of gold deposits in Brazil. They've only got one activity, and that is mining and exploration of gold assets in Brazil. They've got two geographical segments, Brazil and UK. And basically the UK is just their financing hub, their geographical sort of head office, if you like. All the operations are over in Brazil. And they've got half a dozen mines. They've got Palito, São Chico, Coringa, Jardim de Ouro, and Tapajós regional exploration. Now, that does raise the question, if we're exploring, what are we exploring? Worth going and reading into that. But the reason I like this business is it is cash flow positive, and it has a 30% return on capital employed. And if you look at the share price of Serabi, remember the ticker is SRB, you will see that the share price has gone up an unbelievable 50% in 2023, 145% in 2024, and another 150% year to date in 2025. That is an absolutely spectacular ascent for a mining business, largely driven by the gold price, but not solely driven by the gold price. I suspect this business is gaining operational efficiencies and cash flow momentum, shall we say. So it's one that caught my eye, one that I think listeners might enjoy going and reading a little bit about.
I think it's one, Henry, that only a few people have actually caught in the past year or so. As you said, it's up a significant amount. It is a tiddler at 198 million, but it's still quite cheap in a sense of the PE ratio is quite a low PE ratio from what I can see here as well. And if it's producing now, it's going to be the most profitable that it's ever been, at these sort of prices. And I'd like to say, without triggering a war somewhere over there, is that Brazil's not a bad continent to be in. country to be in, jurisdictions wise. There's not a lot of stuff going on where mines are being shut down. Stable government, So you always need to look at which country the mines are in, and Brazil's a relatively safe one to be in. So that's a good call, mate. And you know what? When it comes to gold stocks, that's probably one I have never looked at. Never looked at that one, Henry. And year to date, you say 100 and what? Did you say 150% year to date, or in 1 year?
Year to date, it is up. It is up. What's that? 350% in 3 years.
Oh my gosh, that is just wrong. Just wrong in all sorts of shapes and forms. I've never looked at that. I have never looked at that one. That is so wrong on many levels. Right. Okay, Henry, we're going to keep this one short and sweet. So this pod, I'm going to go for another large company here, Henry, UK listed one, headquartered in Mexico City, the largest silver stock in the FTSE 100 index and the biggest silver producer in the world, listed on the London Stock Exchange and the Mexican Stock Exchange back in 2008. 17 billion. Price range is £5.87 to £24.18. And guess what? The price today, £23.60. So it's already four-bagged in the past from its low, gone up fourfold in the 52-week period. Year to date, Henry, Fresnillo. When I said Mexican, most people just guessed that if they knew the mining stocks, and listed in the UK, is up 291% year to date. Year to date, Henry. We're in September, buddy.
That is spectacular.
Have I looked at Fresnillo year to date? No.
I've not even heard.
But this pod is the first time I've looked at it.
I've not heard anyone mention that on social media. Not a single soul. So if anybody out there does own Fresnillo, come and tell us.
Unbelievable. Unbelievable. Oh, so that's where we're at with that one, mate.
I like
that's
it.
That's where we're at.
I like it.
So,
spectacular.
Yeah, so it's absolutely brilliant. Yield of 1.5%.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
Currently focused at the moment on silver. I'll read the latest, the bits that I've got here. Half year results, Henry. Adjusted revenue up 27%. Revenue up 30%. Adjusted production costs, which you talked about earlier, down 20%. Yeah, cost of sales, they've also driven that down by 16.7%. Gross profits up 160%, Henry. Yeah, gross profits up plus 160%. Profits from continuing operations before net finance costs and income tax up 266%. That's some absolutely crazy numbers there. Yeah. Profit for the period before income tax up 137%. Income tax expense and mining rights up 20%. Profit for the period up 297%. Everything up, everything up, everything up. Balance sheet strong balance sheet with cash and other liquid funds of 1.8 billion, up from 1.29 billion, and pays a dividend. I don't know what more you can say about that one.
Like
Sitting
it.
there near its 52-week highs, multi-year highs, pays a dividend. It's smashing it out the park. So that's another one to have a look at there. More silver orientated than gold, and yeah, primary production of gold and silver with additional products of associated base metals. That's definitely one to have a look at and see what else is going on regarding that particular one. Have you looked at Fresnillo, Henry? Any thoughts about
I
that
can't
particular
say
one?
I
It's
have.
already gone to the
I've
races.
heard of it. I've never looked at it. Never looked at it. And again, this goes to show, you can write off whole sectors. I often give retail a bad rap, and you can end up missing out on these amazing opportunities. I've not got a single share in my portfolio that's gone up 300% in a year. So yeah,
So
very, very well done. Very well done.
Yeah, so that's my two. I'm going to give a shout for two other little stocks that you should keep an eye on as well. I think, Henry, you might own one of these from when I've looked at your tweets in the past. Sylvania Platinum, another one that's
I
done
used
reasonably
to
well.
own it. I don't
You
anymore.
used to own it.
Yeah.
And one of the fan favourites was why I'm not talking about it, because loads of people have talked about it historically already. It's Greatland Gold, another one that's done really,
Oh,
really
yeah.
well. Listed
Yeah.
in the UK and also on Australia ASX as well. And then we spoke briefly about some of the other metals that are used, energy metals, or sorry, not energy, sorry, commodity, coal. One to keep an eye on because it's I think it's called, is it thermal coal? I think it's the word
Thermal
I'm
coal.
looking
Yeah.
for. And that's Thungela that got kicked out of, demerged from, spun out of Anglo American. That's done reasonably well from when it listed, but it peaked at something like 18 quid from a pound. I think it was listed at somewhere in around a pound. When it got spun off, went to 18 for some bizarre reason, and then it's come all the way down back again. I think it's sub £5 again now, near to £4. But I keep an eye on that because once the thermal coal prices start to rise again, I think that one should then start to go up, and the issues regarding cost of the coal prices that they can currently get, that should, every single price point that it increases up 5, 10, 20%, that'll drop to their bottom line and profitability. So that should help. And am I pronouncing this right? Thungela?
Thungela. Yeah, that's how I pronounce
Thungela.
it.
Yeah.
Yep.
So that would be another one I would say go and have a research of, including Sylvania Platinum and Greatland Gold.
Yep.
What's your second one, Henry? Have you got another one
Well,
in there?
I've gone for a royalties type business again. So
Okay.
slightly different. This is Wheaton Precious Metals. The ticker is WPM. Now,
WPM.
I just want to dive into what these guys do a little bit. Most mines, they produce a variety of metals. When we talk about a gold mine, you don't really get just a gold mine or just a silver mine. Copper tends to throw off copper, gold, and silver, and you get lead zinc mines which have got silver as a byproduct. And those byproducts, generally speaking, are not the primary production focus of the mine. They just happen to be a byproduct that's got some value. Now, what Wheaton Precious Metals does is go around these mines that have got byproducts, and they buy upfront a certain volume of this byproduct. So they will go to a copper mine, and they'll say, we'll buy 80% of all the silver byproduct that you produce this year at a certain rate. And they then go and sell that on the market. So they buy the ore, they smelt it down. Sometimes you get ingots from the ore, the mine will do the smelting for you. And you can then sell that on the market for a profit, providing you can buy it at the right price. Now, this is called streaming, effectively. You're creating streams of metal product. And it allows mine operators to realize more value from their byproduct metals, and provide investors with some of the highest margins in the industry. They purchase a percentage of the metals produced by the mine for an upfront payment. When the metal is actually delivered, you then pay the second part of the payment, and you then sell that metal onto the market. Now, Wheaton Precious Metals had record revenue in 2024 and record operating cash flows. And their per ounce operating margin was up something like 25, 26% in 2024.
Good.
Very, very strong, positive cash flowing business, this. And the share price has done terrifically well. Again, up every year for the last 5 years in a kind of a compounding fashion. We've done 1.2% in 2021, then 2.1%, then 26%, 13%, and this year 79% year to date. We really are starting to get some exponential growth in this share price, some exponential growth movement. Positive return on capital employed again beats my benchmark of 10%. And it's a business again that is slightly different. They don't operate their own mines. They don't have those energy costs impacting them. They just buy the byproduct and sell it onto the market. And they seem to be doing fairly well at it. So Wheaton Precious Metals, WPM, interesting business I don't hear a lot of people talking about. One that listeners might like to go and take a look at.
Good call on that one, Henry. And like you say, it's taken the waste and hence the margins on it is so wide, makes it so profitable. Yeah, fantastic returns. Year to date, up 75%. Yeah, it's not bad, is it? Not bad for a little.
Spectacular.
I almost want to call it a recycler, but I want to call it a recycler, but that would be a bit, disparaging, wouldn't it?
Yeah, it has more than double the performance of the royalty company I own, who I'm not going to name. You can go through my Twitter and find them. They've had a dreadful couple of years. And I looked at this and went, if I just bought this, I'd have been a lot happier.
Yeah. I think partially what yours and my issue is, we prefer to buy things that are listed in the UK.
Yeah.
We keep, and that's that bias we've got. And then it's outperformed by something else overseas, and we see. So we had this conversation about so many people going, "I'm done with that now. I'm going to buy the best in class, and the best in class is in Canada, or the best in class is in Australia, or the best in class is America. I'm going to go there instead." So we try and be loyal, but it may cost you in the portfolio returns. No, good company, Henry. Done absolutely brilliantly. You mentioned ETFs a couple of times. There's one I will ask people to go and have a look at, and it's the ETF focused on US metals and mining stocks. And again, they've all had a great run thus far, so be mindful of this. And that is the SPDR S&P Metals and Mining ETF, ticker symbol XME, 2.3 billion market cap ETF. Go and have a look at that one.
Never heard of that.
Have you found it? XEM is a ticker, Henry.
Yeah.
It's an ETF.
XME. It's
XME.
SPDR.
Sorry. Apologies. XME.
Yeah.
The New
I'm
York
not
Stock
getting
Exchange.
a lot of data on ShareScope for this, interestingly.
Yeah, because it's on the New York Stock Exchange, mate, and it's an ETF. I'm not sure how broad a range of ETFs they cover.
Yeah, this looks like it might be worth going and taking a closer look at, though.
Yeah, I just thought I'd throw that one at the death for other people who fancy an ETF to have a look at, and don't want an investment trust or other options that we've spoken about already. Let me just see if I can find some dates on here. Any 1 second. Yeah. Right. So
it's a big beast. It's 2.6 billion in assets under management.
Yep.
Low expense ratio, 0.3%.
That's not bad, is it? Last month it's up. In the last month or so, up 14%. The last 6 months, up 66% as an ETF, mate. Yeah, little parcels are sitting there going 66%. Year to date, up 61%. 1 year, up 46%. 5 years, up 288%. It's just took off earlier this year and it's gone up significantly year to
Interestingly,
date,
of their top
61%.
holdings, there is only one name I recognise, which probably says everything.
Yeah,
So,
American mining
by
stocks.
order of wasting, Centrus Energy, I've never heard of, Kerr Mining, Core Natural Resources, Cleveland Cliffs, Uranium Energy Corporation, Alcoa. I think I've heard of Alcoa.
You've heard of Alcoa, yeah. So if it's not on the S&P, they ain't going to be buying it, basically.
Yeah.
Yeah, but that's done significantly well. Just throwing that one in for everybody to have a look at. I'm hoping we've given you, ladies and gents, a variety of stocks to have a look at. Henry has had a very, very interesting day, long day, not helped by me, another long day. So we're going to try and keep this one short and sweet. It's probably the first sub 60-minute pod we've done in a year, bar the one we did at the Master Investor Show or at the Investor Summit. But what do you want to add, Henry, before we close this particular pod?
Well, I think just a roundup really from me. I think when it comes to looking at mining businesses, you've got to be careful, right? So you want something that is cash flow generative, in my opinion. And to do that, there are a couple of things you can look at. You can look at profit margins, you can look at cash generation, you can look at debt on the balance sheet, you can look at returns on capital, and you can look at what the share count's doing. Set up a screen to look at these things, and anything that doesn't pass that screen, just be very, very careful with it.
Mm-hmm.
Even if it passes that screen, though, you need to go and do some research, because you need to understand the quality of what they are mining. You need to understand how many years the mine has got left in. You need to understand what the permitting permissions are, what the government situation is with those permits. How do they extract the metals and ship them? What the logistics like? Has the team doing this ever done it before, or is it me and Peter with a pair of shovels and some fake mustaches?
That's unfair.
But you've got to ask yourself, just because these businesses are going gangbusters right now and the commodities prices are going gangbusters, what happens if that goes into reverse? If you get a 30% price drop next year, what is going to happen to this business? If it needs perfect prices to work, you're not always going to have those perfect prices. So mining can be a great place to invest. I own a couple of miners. I've always owned a couple of miners, and I am bullish on commodities, but it does not reward haste. If you think you're going to get rich quick, you're not going to do it with mining. It's a bad idea, guys. The rocks do not care how fast you want to get rich. So be careful, pay attention, do your research, go find these opportunities. We've thrown a couple out today, but insist on quality of mine, quality of management team, quality of balance sheet, and you should do okay in the mining space.
Brilliant summary there, Henry. Fantastically well said, my dear friend. I think I don't need to add to that. Henry's done it there. And just wish you all good luck regarding the stocks that you've got, and congratulations if your portfolio is aligned with what's happening with the FTSE 100 at the moment, at all-time highs. If your portfolio is at all-time high, huge congratulations to you. That's what I'll be saying. And if you've got some mining stocks in there that are throwing off nice royalties and dividends, even better, because it'll compound even quicker your portfolio going forward. That's a wrap, ladies and gents. A big round of applause to my fantastic co-host, Mr. Henry Viola Hare, for being here and being so good at what he does, and for being consistently kind and generous to me, for being fumbling up the ball too often. Thank you, sir. And thank you, ladies and gents, that have made a donation to Menphys. And if you can, just find the Just Giving page at www.justgiving.com/Peter Higgins and drop us Menphys some change and support some disabled children. We will see you in the month of October, when we will start to see it getting dark at 6:30, maybe 7:00. It's going to be so uncomfortable, mate, isn't it? We're used to the sun. Oh gosh. Hopefully Henry and I will see a couple of you, if not a handful of you, if not a dozen of you or so, on October the 10th at the AIC showcase in London. Until then, take care God bless you all. Stay kind, be generous to others. Henry, thank you ever so much, mate, again.
My pleasure, Peter.
All right, ladies and gents, take care. God bless you. Bye for now.
Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage